All right, guys, we got CNBC. Weekly mortgage demand surges 11% as more homes hit the spring market. I was asked a question yesterday, like, hey, how's things at your office? I was like, the guys keep opening escrows. So, look, I understand people are like, oh, the mortgage industry sucks and it's dead. And it's not really dead around here when you guys are opening new escrows. Yeah. And it's represented by this number nationwide. And we're seeing increases here as well.
Yeah.
So people have stuff they need to refinance. They got problems they got to get out of, and they're looking at their future and going, how can I use this house, this loan, and this access to money to get myself to where I need to be?
So I have an example from a client right now that's refinancing, and they had a payment super low as well. I think they were paying like $2,700. They started doing renovations, construction on their house, and they paid off debt with a HELOC that we did last year. But then this time around, we were doing a cash out refinance to pay off their HELOC, and then additionally finish some repairs that they were doing around the house. So we ran into an obstacle where their property complex wasn't able to, have the things that they needed in the back end to have the loan go through FHA financing.
A reserve.
Yeah, reserve. They didn't have enough allocated reserves to be able to pass it through the FHA financing. So we either had two options: either wait till they do have their reserves, which their fiscal year ends in June, or we could try finding a different route that might be a little bit different, might have to adjust and make things, different from what we already had it set up the other route. But what I got from that is that the rate was higher. The payment, yes, was a lot higher than what we initially had. I think it was like $300 more. But what I took from it is that the client, once I broke everything down, like, hey, I'm sorry, like this is what it's going to be. This is how it got adjusted. She's like, I need the money. I need to finish the repairs. I need to pay for this. Like at this point, like I'm kind of locked in. I need the money. I'm able to pay for the monthly payment. They make, $11,000 a month. So like they could cover the payment that went up to like $3,900 and change. So for them, it's more important to obtain those funds and get what they need to get done, regardless of what the payment is. My thing to them was like, hey, I know this is going to be uncomfortable for the first couple of months, but the good thing is that rates are on their way down. We've been following this. We know this for a fact. So it's just going to be a temporary Band-Aid. 6 to 8 months, 8 months tops, we're going to be able to then see what the market's doing. And if rates are a little bit lower at that point, guess what we're going to do? We're going to refinance you down from that rate and get you that savings that, we did intend to give you. And you might save more than what you were additionally if we would have done it, earlier in the year. Yeah. So what I got from that is that, people are going to need what they need when they want it. And regardless of the situation, like if their life presents that, hey, I need this money or I need to make this move, who cares what the market is doing? Who cares what economy is doing? They're going to make the decision based off what's going to benefit them and their family so that they can get to where they want to be.
Correct. They're going to figure out, how am I going to get this done? Because it's already stressful enough.
Consumers aren't
things
thinking
in shambles, right? And
I think that's the theme. I overhear you guys talking to people and the situations and all that. And what I'm overwhelming here is people are looking for solutions. And they're looking for solutions. And when they're out of them in these other peripheral areas of their life, they're like, okay, I'm gonna turn to my house. I'm going to turn on my equity. I'm going to turn to my line of credit, whatever, because I have this, I'm log jammed or I'm roadblocked or I'm boxed in over here. I got to free myself up over here somehow and get myself back on the right course. I mean, it's hard. I understand it's a hard choice to make. It's not necessarily the one you want to make, but of your available options, it might be the best one, even of a nasty lot of choices.
That's it.
I feel like, unfortunately, just human nature, we wait until things got really bad to then go and try to do the thing that I should have done beforehand. Like if you already knew you were going to be drowning in debt, maybe tap into your equity a little bit sooner, but you wait until you're literally capped out to be like, all right, now I want to go in. But sometimes that's a catch-22 because all your stuff is so maxed that when you put your loan through, sometimes it might not work out. So I always say just make sure that you're always checking in with somebody that can give you a perspective outside of your emotional perspective when looking at your finances so that you're able to understand exactly what the numbers look like. Like when William breaks everything down and I look at it, I'm like, yo, that makes sense for your client. Like, have those conversations, and although they're going to be uncomfortable, speak to whoever you're comfortable with talking about your finances, whether it be us, whether it be another loan officer out there that you trust. Make sure you're having those tough conversations because down the line, if a situation like this arises, you want to be prepared, don't you?
Yeah, that's it.
This is why mortgage demand is surging. It's not just purchase loans. It's because people are in situations they need out of. It comes down to three things for me, guys. It's credit cards, consumer spending, and equity. Exactly. You have a problem, and a solution. So for those people who are homeowners and you have high credit card balances, high credit card rates, you have consumer spending that's maybe out of control, and you need to curb that in your own personal spending behavior, the equity might be your way out. And again, people in the comments are like, oh, you guys sell loans, you're supposed to say that. Like, look, this might actually only be people's only choice. So, fine, I hear you, but also I'm not going to dismiss the fact that if someone's in desperation and need and their house can come to their aid, that's what we're here to do.
Yeah. And you know what? I'm okay with that. The good thing is what we're saying and what we're doing right now are things that are currently being applied.
Yeah.
And if most people don't hear about that, they'll never know what they're able and capable of doing.
Yeah.
So yes, we talk about these things to encourage people to plant a seed, to give them ideas like, what is that I can do if I'm in that situation, or just ask somewhere where you're at.
Yeah.
Let me see what I can do to get out of this stressful situation.
Yeah.
$195,000 worth of debt. Could that be pretty stressful?
That's a lot. Yeah.
When you have, and then how long, one of my questions was like, how long do you think it's going to take you to pay off that 195? You know what the answer was?
20 years?
No, he said forever.
Oh,
exactly. Right?
Okay.
Exactly. So the way we're teaching is, here it is. Here's your math. Here's the formula. Here's the calculator. Utilize it, and this is what we're doing.
Yeah.
Math doesn't lie. Here you go. It's not like we.
Yeah. I mean, how much longer are you going to be able to pay $9,000 out of pocket to service that debt before you finally got to make a choice?
Well, just to like add on to your point, it is our job. It is our job to go speak about this. It is my job to tell you these things.
Yeah.
Because when you go to the doctor, sometimes you don't like what they tell you, do you?
That's it.
But do you have to follow what they told you so that you get better?
Yeah.
Absolutely.
So I'm not saying I'm a doctor, but I'm like, yo, I do this every day. I reference the mortgage doctor.
Yeah, mortgage doctor.
No, but what I'm saying is that we're doing this, seeing this day in and day out, If we're saying, hey, you should probably be doing this, I am saying it because it benefits you. Yeah. And of course, it is my job, so it's going to benefit me as well. But if we can both win and I can help you get to your solution and you can help me get to my solution, well, does it really matter at that point? We're both winning. You get your solution and I got my job done.
Absolutely. And the other thing is, we're here in California, they passed that ADU law. We're leveraging the heck out of that.
Oh, heck yeah.
That's like our gold rush here in California, right? So if we can teach these people that have a ton of equity, which we've been doing quite a bit of ADUs now, financing those, I'll tell you, how many people do not get emotional when they call us when they get done with that and they have it rented and they're like, oh my God, this is like, it's just a game changer.
And one thing I feel that, that we get railed in the comments like, oh, you guys are mortgage people, you guys do that. But at the end of the day, like if I can't help someone, I'm going to tell them, yo, I can't, know? And it's my job in my career to do this and stay in business for as long as possible. So, influencing one person in the wrong direction isn't my goal because I want to be here 10, 15, 20 years down the line. So for me, I want to make sure that I tell you the truth, even if you don't like it. Go somewhere else. Have them lie to you.
Yeah,
come
exactly.
Back, and I'll be like, hey, you told me the truth.
Well, just like you brought out the Dr. Brian. Example, and that we say, go get a second opinion or third opinion if needed, right? If the situation is that severe, go get a couple opinions. Yeah. Simple as that.
You're free to do so.
No, demand's going to continue, guys. That's just going to be the way of it. I mean, situation is going to force people into those corners, and they're going to have to make choices. So it's either going to be you're going to refinance and get yourself out of debt, or you're going to list your home, which is going to create more inventory. So I think that's the summation of the show for today.
Yeah.